Hi guys! A few months ago we created a really popular video on this channel called How We Paid Off Our Mortgage in 7 Years. That video told a story of how we went on the journey over 7 years to pay off our 25-year mortgage. Whilst that was exciting and really powerful as a message, it doesn't tell you what actually happened at the very beginning. By that I mean, what happened before we even took out a mortgage in the first place. This is where the subject of today's conversation comes in, which is all about credit scores. Our journey as far as credit scores were concerned really began when we got married in 2011 and looked to buy our first home in 2012. And of course, we're excited we're going to be buying our first home without giving a lot of consideration to what our potential credit scores and credit reports actually look like. And as life would have it, when we went ahead to check those bits of information, we had a complete and utter shock. My wife, for example, had of course changed her name as somebody who just got married, and her credit report just was still reflecting her old maiden name, for example. In my case, I had lots and lots of errors in my credit report, which then had a massive knock-on effect on my credit score. In fact, I had my score in the low 400s. So guys, to keep this real, because I'm teaching you how to get your score to that perfect score of 999, during the lunch break today, I went away and checked my own personal credit score. So I'll put it up on the screen for you guys to check out. Now, of course, I'm not showing off at all, but my score, as you can see, is a score of 999, which is rated as excellent. What that means is that I'm seen as somebody who manages their money properly, you'd hope so, and that it means that I'm seen as a safe pair of hands because I've been making the right decisions about my money and I've demonstrated responsibility. That's the key word really. The ability to take on a loan and pay off that loan consistently time and time again. And you'd notice that there are other scores below the excellent score, such as a good rating, a fair score, a poor score, or a very poor score. The main difference really between those ratings is that someone like me, for example, who on this occasion has a really high credit score, is able to have access to much cheaper debt compared to somebody who perhaps has a very poor score at the minute, who might go out there into the marketplace and try to borrow money and will likely get declined on every single application. Or if they actually got accepted by anybody, they would be doing it at some seriously punitive rates of interest, okay? So if you're one of those people who's currently at very poor or poor, I'd highly recommend that you do not make any applications at this minute, okay? Take complete time out and apply every single thing I'll demonstrate to you on this video. And without a doubt, I can absolutely guarantee that in about 3 months, you will start to see an increase of at least a couple hundred points on your credit score by applying these practical ideas today. So today I'm going to share with you guys all the tips, all the strategies, all the things that you can start to apply practically to help you increase your credit score to a score of 999 or around that number. My name is Ken of the Humble Penny and Financial Joy Academy. What we do on this channel is give you the tips, the insights, the practical hacks to help you work towards a dream life of financial independence and money joy. Buying your first home is one of the most important things you can do in your lives. Most of us know it's possibly the biggest expense you'd ever make. So getting started the right way is always going to be working in your favor, and getting your credit score as high as possible is a very good way to make sure that you get the right deals in place and you get started on that journey, whether it's your first home, whether it's you taking out a loan, whether it's you taking out a credit card, whatever it is you're trying to do, making sure you get the terms that serve you the best. Okay, so I'm going to use this video to answer a bunch of questions I've been asked by so many people via email, on this channel, in the comments, on Instagram, so we can just really take a deep dive into this subject about credit scores, okay? Before we get started, let's talk about what on earth a credit score actually is. The way I like to look at what a credit score is to think of it in very ordinary terms, okay? So I think of a credit score as a financial selfie. We all know what a selfie is, right? But what most people do not know is that every single financial decisions that they make in their lives day to day is reflected on some computer databases somewhere else. It's credit referencing agencies, which you know about, such as Experian and so on. These agencies essentially record information about you and me, and that bit of information lives until a lender one day needs to look at it to make a judgment of how we've been managing money, okay? So we essentially live our lives living parallel lives, our day-to-day normal lives and our financial lives, which essentially lives on computer databases of these various companies. And so your credit score is a score that's calculated, a formulaically driven calculation that comes out as something else known as your credit report, okay? And we're going to be going into detail of what these are and how you can go about checking the score for yourself. So why does it even matter that you get yourself a high credit score? There are three main reasons why this is absolutely critical that your credit score remains high. The first is that you get low interest rates, okay? You might not know this, I'm sure you probably already figured this out, that lenders discriminate time and time again, okay? There's an old saying which is called the Matthew effect, which goes something like this, which is that for those who have, more is given, and for those who do not have, the little they have is taken away. So that same Matthew effect can be applied to money and borrowing. For those who have good credit, the best deals, the lowest rates is given to them. For those who do not have good credit, the worst possible deals is what they end up having. Essentially, the little they have, the money they have essentially gets taken away because they'll pay much higher interest rates, much higher terms than somebody who has much better credit profiles. So in summary, a better credit score leads to a lower perceived risk for you and me, which then leads to lower interest rates and better deals from lenders. The second reason why a high credit score matters is that you can get a higher credit limit. Now, of course, you don't just want to borrow money just because you can borrow it, but it certainly helps to know that you have a much higher limit available to you because you are perceived as a much safer pair of hands because you've been managing your finances properly. The third benefit is that you get access to more offers. So essentially, the better your credit score, the more lenders are available for you to borrow from, which then leads to the higher probability that you get accepted if you applied for a mortgage or a loan or whatever, okay? So better credit score essentially leads to a better outcome because of a higher probability of acceptance. Now, let's say you're somebody who at the moment has low credit score. You might be somebody who's even new to the country and you've never had a credit profile. Or you might be watching this video thinking to yourself, Ken, all these things you're going to speak to us about, these strategies, how long would it take for me to start to see some results, okay? The absolute truth is that nothing happens overnight, okay? So I'd probably say on average, probably start to expect a change in your credit results, your credit profile and your credit scores, anything from about 3 months to 6 months for all the information on new accounts, new credit balances and things like that, and the effect of all the actions you're going to be putting in place after watching this video to take effect. I say 3 to 6 months is the kind of time period you should allow for you to start to see a change in your credit score. Now, before we dive into mentioning these 10 strategies you can apply to increase your credit score, I'd love to mention that at the end of this video, I'm going to be putting out a link to a checklist that you can simply download for free to use to work towards increasing your own credit score. It's a simple one-page checklist that just gives you something you can tick off as you work on these practical ideas to increase your credit score. Now let's dive in and look at these 10 ideas, these 10 strategies that you can apply today to start to increase your credit score. So number one is to get your free credit score and your credit report and check for errors. This is possibly the lowest hanging fruit. By that I mean, it's one of the easiest things that you can begin to sort out to start to see some changes. Believe it or not, credit reference agencies do make mistakes. And I know this personally, as I mentioned to you, when we were trying to take out a mortgage for ourselves. I looked at my credit report and believe it or not, I had a county court judgment, something known as a CCJ, attached to my name, which was completely incorrect. So I had to contact them and they immediately took that thing off my credit report. Now imagine, had I not checked that and I'd gone ahead and applied for a mortgage with my wife, imagine what would have happened. We would of course have been declined, and that would have compounded the problems that we might have faced at that time. At the same time that I faced this problem, my wife Mary also checked her credit file and noticed that she was still being recognized under her maiden name rather than her married name, which again then introduced complications because we had to submit ID, our marriage certificate to prove that we're now married, and of course her credit profile should be reflecting her new married name. So there are lots of little things like that that you should absolutely make sure you check out when you grab your credit score initially and the related credit report, okay? Things such as, is your date of birth correct? Is your first name, middle name, and last name correct? Is your current address correct? Are your previous addresses correct? Are they showing the right number of credit accounts that you've got? Things such as amounts that you're owing in different places. Or is there stuff on there that you do not recognize which might be acting adversely against you when it comes to your credit scores, okay? So that simple review is absolutely critical. I'll put a link below and above to a link to Experian for you to go there and get your free credit score, and it's up to you to check out. From there you can explore getting yourself a credit report if it's something that you want. I personally highly recommend getting a credit report because it gives you a full detail of what your credit profile actually looks like and what the lenders themselves are seeing. An alternative way to getting your credit report is to get a statutory report, which I believe you can pay £2 for to get a copy, but it does take a bit of time to come to you, but you can pay £2, I believe, to get that copy for yourself. Tip number 2 is to make sure you pay your bills on time without fail. This is one of the biggest culprits when it comes to people being affected negatively on their credit files. So if you do not pay your bills, it leads to you having a delinquent account. And if you repeatedly do not pay your bills, it leads to what's known as a default account. And both of these things have adverse impact on your credit score and of course your credit report. It means that your score will be a lot lower and the lenders will view you in a negative light because you would have demonstrated to them that you are somewhat unreliable in keeping up with your payments on a monthly basis. The biggest culprits for these are things such as utilities bills, even things such as your phone bills. Believe it or not, I'll mention later on in this video, but a big mistake a lot of students actually make at university and places like that is that they take on things such as mobile phone bills and might just forget about paying them for a very long time, and of course focused on their studies and on their graduation and what have you. And over time these things come back and kind of haunts them because they haven't focused on paying those bills off. So make every effort to make sure that you are paying your bills on time and that you are absolutely without fail not missing those key bills such as your utilities, which have an impact on your credit report. Tip number 3 is to keep your credit balances low. Let's say you are somebody who has a credit card with £1,000 credit limit on it, okay? It might be easy to spend all of £1,000 or to spend 900 of £1,000. But if you really want your credit score to shoot up, what you really want to do is to keep the balance on your card to a maximum of 25% of your credit limit. So if your credit limit's £1,000, make sure you do not spend or have a balance of more than £250 because that in itself indicates to the lender that you are not over-reliant on debt to finance your lifestyle on a day-to-day basis. And making sure that you actually pay off your credit card balances every single month without fail does the job of demonstrating responsibility on your behalf to a potential lender. Tip number 4 is to consider closing unused accounts. If you're like me, you probably have 4 or 5 bank accounts, and a lot of them you might have had for years, for example, okay? If you've got such accounts, I'd highly recommend closing accounts that are mostly unused, to be honest. If you've got accounts that you haven't used for a while, please consider closing those down and perhaps focus on retaining the accounts that you've had for the longest, the ones that demonstrate that you can be trusted as somebody who can handle an account for a long enough time whilst making sure that they are keeping up with their payments and what have you. So removing unused accounts and keeping the longer accounts that demonstrate a good credit history have a positive impact on increasing your credit score. Tip number 5 is to limit the number of credit applications that you make. So if you're somebody who's thinking about taking out a mortgage or applying for, a loan, you want to make sure that as you're building up to that time when you're going to be making that application, that you are not seen to be making many credit applications, because each one leaves a footprint on your credit profile and works adversely against you, because the lender will see you as high risk as somebody who is potentially highly dependent on debt. So the rule of thumb is that you should make sure that you only do one credit application in a period of 3 months. And if you do that, it reflects very positively from the perspective of the lender. Tip number 6 is to make sure that you are registered on the Electoral register, okay? Now, the thing about the Electoral register is that it demonstrates 2 very important things if your name is on it, okay? It demonstrates stability because you are able to live in a particular place, okay? Someone can pinpoint that this is where you live and this is where you've lived for a while. And secondly, it demonstrates trust, okay? Because the fact that you're on the Electoral register alone typically means that you've had to kind of jump over a few hoops to be able to get your name on that register, okay? It shows you've got, proper ID, you're somebody who's had a few checks done on them in order for you to actually be able to acquire a property or be able to rent a place or what have you. So getting your name on there is absolutely critical. The really other important point is to make sure that your name is on the Electoral register for the right address, because a lot of people have their names on the register but for the wrong address. So for example, you might be living at, say, address A, but your name is on the register for address B, where you used to live before. And this is a very costly mistake to make. This is a really easy win if you can download your credit report and check that you are at the right address as far as the electoral roll is concerned, because a simple correction to that address. Tip number 7 is to check for late payments that you can rectify on your credit report. So the last 6 to 12 months is the key period over which you want to be checking that your credit report is reflecting the right information. Let's say you've gone and you've downloaded your credit report and you've analyzed it and you've noticed that you've been late on a payment or a couple. You might have reviewed that and thought to yourself, oh, I don't actually recognize being late on that payment, or I don't recognize what that payment is. What you can do is to contact the supplier of that particular service and see if they can try and get that removed from the credit report on your behalf, because you'll be showing as, of course, a late payment, which will be working against you as far as your credit score is concerned. Alternatively, you could contact Experian themselves if it's something you've got a justifiable reason for why that payment was late. I'd say the additional thing you can do actually, which Experian does help you do, is you can actually put a note in your credit report. If it's something that you can absolutely justify, they will let you put a note in your credit report such that if a future lender is about to do a credit check on you, for example, they can read that note and see your explanation for perhaps why that exceptional circumstance had happened. Why you had that late payment, perhaps because something had happened in your life that meant that you could not have made that payment. It's actually important to know that that's an option that's available to you when it comes to you dealing with the credit reference agencies, for example. But the options remain. You either contact the supplier and try to engage them that way, or you contact the likes of Experian and try to get it resolved that way. Tip number 8 is to focus on borrowing only what you need, okay? It's so easy to borrow money. This is one of the biggest challenges in our modern days, that a lot of people borrow money and quite a lot of people don't realize that they absolutely have to pay that money back. And what ends up happening then is that when you can't pay money back, it might end up leading to extreme circumstances such as a county court judgment, or an IVA, or even to potential bankruptcy. So focus on borrowing only what you need, because this will help you ensure that you've got manageable debt. And if you've got manageable debt, then you're without a doubt more likely to maintain your current level as far as your credit score is concerned. And by demonstrating some responsibility of that debt that you can manage, you will see your credit score increasing as time passes. Tip number 9 is more of a preventative one, and it's to keep an eye out for fraudsters. Identity theft is big business. And I know this because I had somebody a few years ago apply for a credit card on my name, and luckily I found out about it. And of course, he's investigated and completely removed from my credit report, okay? And that's because identity theft is massive business. People are always looking to rip other people off. And for me, what I did, and I highly recommend you do this, were 2 things. So the first thing I did was to set up what's known as an alert service on my credit report. And you can get this with Experian, by the way. What that means is that whenever anybody does any form of a credit check on my name, I will get a text message to my phone alerting me to it. But to take things to a whole different level, the second thing I did was to add a password to my credit report. And what that does is that whenever any lender anywhere in the UK or anywhere in the world wants to do a credit check on my name, I will have to be contacted first to give my password in order to confirm that this was not a fraudulent type of transaction, okay? So those 2 things can help you prevent disaster situations happening to your credit file, which then completely affects your credit score in a negative way, which then completely sets you back. This point is a preventative point, but one that if you put it in place can prevent such things happening to set you back from all the progress you potentially would have made so far. Tip number 10 is to keep things naturally diverse. So lenders do not want to see you with 5 store cards, for example, okay? They much prefer to see that you've got maybe a store card and a car loan and a credit card, because in normal life, people don't tend to have 5 store cards. I mean, some people do, but naturally you tend to have little bits of debt in different places. But my word of caution here really is that it's highly ironic really that you have to be seen to have different bits of debt to prove that you are somebody who can manage debt. Because of course, all these bits of debt mean that you are more prone to taking on more debt, which potentially means that you're more likely to get into trouble if you are not managing that debt properly and responsibly. So my point here really is just to be aware, because whilst you're being naturally diverse, just be aware that you are dealing with debt every step of the way. So it's absolutely critical that you are only borrowing what you need to borrow, and that if you do borrow money, that you are managing that money with the ultimate goal of becoming debt-free. Now, I'd love to leave you guys with a bonus point, which is about relationships, okay? Now, a lot of you watching this might be, quite young, in your 20s, perhaps 30s, or even younger than that, who knows? But the point I wanted to make here is that it's very important to realize that the person you go into a relationship with does matter. And if you go into a relationship where you become entangled with somebody, whether it's through marriage or whether it's you sharing a credit account, such as a joint account, for example, every single decision they make as far as their financial life is concerned, whatever decisions they make or whatever actions they take or inactions actually does affect you as well by being so jointly linked to that person, okay? So if you're, say, I've got a partner who is terrible at managing their finances and they repeatedly falling back on their credit card payments, because you're so linked to them, it actually does affect you also, okay? So my point here is more of a preventative one, is to just make sure you are actually going out with somebody who is thinking about their money properly, and make sure you're having those conversations if you are already in a relationship, to make sure you are on the same page with your partner, you're communicating, and to make sure that jointly you are presenting a good financial picture to potential lenders. So guys, I really hope you've enjoyed this video today on how you can increase your credit score to that perfect 999. As I mentioned at the beginning of this video, I've got a checklist for you if you want to make this happen in your life practically, okay? I'll put a link below and above to a 1-page checklist I've created to help you practically make this a reality in your life today, okay? Feel free to download that for free and start to take the steps today. If you've enjoyed this video today, please make sure you hit that like button because it really helps to encourage other people to watch our videos and it helps with the engagement on our channel. If you're new to this channel, make sure you hit that subscribe button. Don't forget to hit that notifications bell so you get notified when we publish content twice a week on a Tuesday as well as a Thursday. Guys, let me know in the comments below if you are somebody who has struggled to improve their credit score. I'd love to hear what your key challenges are, and also I'd love to hear what your most recent credit score is. Have you checked your credit score recently? What score did you get, and what is your challenge in trying to increase that credit score? Please let me know in the comments and I'd be more than happy to jump in and engage and help you move forward in increasing that credit score. Thanks a lot for watching and I look forward to seeing you guys again on our next video. Take care and bye for now.